All right, let's go over the trade that I took today. Let me get out this replay actually. All right, so let's go over the trade that I took today on the 30 minute. Pretty much here's the trade that I took today on the USD which is the United States dollar versus the Swiss franc. How I spotted this trade is I was just going through the 4 hour and I recognized this free range here. Also on the daily, what I did see is that I did see that this bearish momentum that we were heading down towards in this downtrend, we actually broke it. We broke out and we retest and we went up, start to go up on the daily. Also, I noticed that this low right here is pretty much like almost at an all-time low. We haven't been this low since 2011. So I'm like, well, it makes sense if we're at like a major structural low. It makes sense that price would consolidate from pretty much what July 3rd all the way to January 14th. So we were in consolidation for all that time. Then we finally broke out of that consolidation for a low since 2011. I mean, since 2011, I think we were like down here. This is the low I marked off. This is like the low. USDCHF has never in history been lower than that. Well, at least the data that I have. So we went back up into this area, then we broke back out, and this downtrend, I recognized an opportunity. So what I did is I dropped down to the 30 minute, and then let me do a replay. Select the bar at which I was looking. So I'm looking at the trade, and I'm looking at possibly entering into this trade. And I drew this blue line here because the thing that I wanted to see would price actually close above this area of resistance, and that's exactly what happened. I think I was looking on 30 minute. So this area of resistance here and this area of resistance here. Let me see here. So what actually price actually end up right here. It closed slightly above in this area. I already, once I saw this candle, I kind of went, let me see if I can select the bar and go back a little bit. Okay, perfect. So right here, around 6:30 a.m. this morning, I'm looking at this bar, and I'm like, okay, price came and we made an indication. Didn't close, but we made a strong indication that we wanted to go high. We wicked higher, and I'm like, okay, we wicked higher. If we can actually get a candle to close above around this area here to beat this resistance, because if you look here, you see these candlesticks right here. Like this is a clear line of resistance. And what happened is we actually had a candle that closed slightly above. You can barely see it, but right above that blue line, it did close above. So at that point in time, I actually entered into a trade. I put my stop loss right here, and I put on two positions. My first position, I like to let it ride to like a 1-to-1, 1.5, and the other position, I like to let it run. The reason being because it's good psychology to actually build wins as I get 1-to-1. Another reason too is that in the future I'm gonna get like a loan, a $5,000 loan, $20,000 loan, and then hey, a couple times a month I take that 1-to-1. I mean, if I'm risking $250 and I do a 1-to-1 and I get $250, I mean that's enough to pay a $10,000 loan per month. So pretty much what happens, I let price run. I end up taking profit somewhere around here. I let price run, and it kind of lost steam. It didn't go all the way to my TP, but it did give me a nice 1-to-5, which is great. I end up letting it come down, letting it retrace a little bit. So I let it retrace a little bit. Once I saw this candle right here, once I saw it did not close above, no, I'm sorry, this candle right here. Once I saw this candle right here did not close above this candle or these candles, I exited the trade because I'm like, okay, we don't have a lot of momentum. I got stuff I got to do. So I ended up pretty much catching almost like a 1-to-3 today.